Hello everyone, Hamel here with a weekend market update. First, a quick disclaimer. Okay, we're gonna start with the weekend charts like we always do. So let's go to spiders. So a nice week, up about 1.97%, higher than average volume. So pretty much all indexes did really well last week. Let's look at Qs. Again, nice uptrend here, 7% from the buy point here. Higher than average volume was up about 1.69%. IWM, this one really went, really did a nice jump there, 5.95% on higher than average volume. So as you can see, everything was higher. So you can see here as well, 1.72 higher than average volume. ACWI, nice, higher than average volume was up 3%. So as we can see, everything was up last week. There we go, higher than average volume. And then 50 was also up, just about average volume. Now let's look at, so just a few market thoughts before I move forward. So the positives, so we are still in uptrend overall. Fed is friendly, and then advanced decline lines, we'll look at that, is still making new highs. So obviously most of the times it diverges before we have a correction of some kind. And then we looked at the 50, as we can see here. So growth stocks should be doing well because this is the top 50 growth stocks as per IBD. Now some of the concerns that we have to look for is, I've been speaking to this, that the sentiment is really aggressive. It has moderated a little bit on IBD's bulls bears ratio. Bulls are at 60 now, so that has come down from almost 63.5, I believe. IPOs, they continue to go up, so there should be some fraud there. High valuation in stocks, and then very hard to find stocks, growth stocks at a good buy point. Last weekend I was able to find mostly defensive names, which most of them worked out. However, we are not able to find good growth stories at a good buy point. So not sure if rotation continues or some kind of pullback is in cards. Only time will tell. So those are just a few notes about the market. Now let's look at indicators very quick here. Let's see. Okay, I'm going to go to line chart very quick, and these are all the sentiment indicators. So advanced decline, and as I said, this made a new high, which is positive. Absolute breadth is also improving. This is good. So this is the oscillator. So as long as it's above 0, that's bullish. So stocks above their 200-day moving average, sideways. 40-day. Now this is making a lower high, and then new high, new lows is good. So just wanted to go over that very quick. I'm not going to go through all of them. And now let's look at daily charts. So let's go back to the candlestick chart here. So spiders. So, we are at 381. So this can easily go up to 400, meaning even though I've been speaking about this for weeks now. If you've been following my videos, my initial thought was that one more leg higher, I don't know how high that leg goes, and then we should moderate and then at least pull back to 50 or more. So I did, with that analysis in mind, I still liquidated my position in 401k just because of the Georgia runoffs, because I did not want to hold it over the binary event because we were not really sure what the result will be. I had a really great year 2020, so I wanted to close it out at the high note. Okay, so that's where we stand here, right? So it can go up there, Qs. So 319, so maybe it goes to 350 before it corrects. I'm not sure, but right now everything is looking really good. IWM, I have been speaking to this, why don't we just go and touch the upper resistance line since we're really close. As you can see, that has been in play for a long time. So since 2010, right? So we are so close, then why don't we just go ahead and say hello to the line, and then we can see what happens there. Again, I'm not saying that will happen, but it's so close, so close. Let's see, DIA, same thing, gentle up. As we also saw on the weekly chart, by the way, 50. This one opened and closed at the same price, so little, just a doji there. So we'll have to see what happens there. ACWI, very nice, and then EEM really gapped up. This one really gapped up, so this is really moving away from 21-day moving average. This tends to happen during melt up, and this tends to happen when almost parabolic. So we can see it was going this way, and now it's going this way. So it's almost parabolic move. So just something to pay attention to, basically. So that is all I have today. So again, market is looking really, really good. Now, that being said, the squeeze was about the 50 days. So again, I am expecting a pullback of some kind in the near future, and that is why I'm 100% in cash in 401k. However, that may not happen. This may continue to move higher and leave me behind, which is fine with me because I'm still 60% of my assets are still exposed to the market. So that is all I have. I hope all of you have your own plans and it is working out for you. Have a good week, and I will speak to you soon. Take care.